Hey, everybody, it's Chris Bongiorno here on SoCo's most interesting podcast. You're going to notice a change today. As a host, I'm flying solo today, but not to worry. We've got a special guest today. With me is Sam Proal. He is an independent insurance agent here in Southern Colorado. I've known Sam for a long time. He's got over 15 years experience in homeowners insurance here in Southern Colorado. Sam, how you doing today, buddy?
Doing good. We got our first taste of fall turning into winter, I guess. So crisp temps.
Yes.
But great morning.
Good.
Day after Halloween.
There you go. We brought Sam in today to talk a little bit about, as a mortgage lender, I've got some questions that I have that, although I see Sam usually once a week at our BNI meeting, there are times where I have questions for Sam that we don't get a chance to catch up on. So I'm looking really forward to today, Sam, and what we're going to cover. And I think for me as a mortgage lender and something that real estate agents are running into, and of course, buyers and homeowners, people that currently own homes, we don't want to leave those folks out, are running into is insurance premiums seem to be all over the place with homeowners insurance, which is what we're going to focus on today. Although I'm assuming they're also all over the place with other kinds of insurance. But if you could talk a little bit about what's been changing in the market, how long that kind of change has been going on, and kind of what the immediate future, year to 2 years is going to look like for people.
Yeah. Well, first, Chris, thanks for having me on. A lot of this entire insurance industry is changing. Now there's broader aspects of the industry. We'll pare that down to homeowners insurance specifically today, but everything is also affecting the next step. So like it or not, there's aspects of auto insurance that affects home insurance and vice versa. So it is, bigger catastrophic aspects there. The general rule of thumb right now is yes, premiums are historically high, and they're historically higher than they've ever been. To lead into what potentially happens in the future, I don't see today's historically high premiums stopping. I see them as a whole going up. So many different reasons for that. First of all, when we break it down into the most simplistic form, frequency of claims. Okay, frequency of claims are going up. Okay, there's more and more properties. Okay, the frequency of claim is higher today than it was 3 years ago, than it was 6 years ago, than it was 10 years ago. Okay, so more claims are being filed. Now, that doesn't necessarily mean your claim. That doesn't necessarily mean that just your neighbor's claim. This is zip code based. This is county based. This is state based. It's area state. Right now, we talk about front range insurance, completely different than we do Western Slope and mountain regions. And then not to just talk about Colorado, we need to talk about other states. So all of these things affect premiums.
So they all kind of funnel in together, if I understand right, Sam. They're all kind of independent. It's not, and correct me if I'm wrong, it's not just the number of overall claims based on more people buying homes and so on and so forth, but it's also the dollar amount of claims is going up as well,
Absolutely.
Correct?
Absolutely. When you talk about frequency of claims and the reasons for more claims, then you talk about the severity of claims, okay, or the amount of money that's paid out after a claim is filed. So both of those two aspects are on the rise. I use a basic example, obviously, in Colorado, back in 1990, 1991, 1992, when hail fell just south of what we call Denver right now. That hail fell in the prairie, okay? Today, in 2023, when that hail falls from the sky, it lands on a place called Lone Tree. It lands on a place called Highlands Ranch. It lands on a place called Castle Rock. And you can apply that to also Southern Colorado as well. Look at the growth in Pueblo West. Okay. When hail used to fall for so many years, it would fall in the prairie. At this point now, hail is falling on structures. So, severity of claim is a big one as well. When you look at inflation, cost of materials, limits in materials, out of production aspects of home insurance, that if you have we went through this in the early 2000s. A lot of people know and understand the term called T-locks. It's an asphalt shingle, and it was a type of shingle. The roofing industry went away from T-locks and they went to what is called a dimensional shingle. Through that transition, when T-lock roofs were on a home, okay, if there was a small amount of wind damage or hail to that type of shingle, those shingles were not available. Okay, so per contract, the insurance industry would then have to replace that shingle or that roof with current products. So you had very small amounts of damage creating large claims. So out of production materials has always been a big aspect of the severity of claims or the amount of payout.
Sam, does it? I've talked to some roofers who have mentioned to me, and our good friend Park Miller is one of them, also a member of BNI. And he was mentioning to me that some insurance companies are now requiring upgraded roofs be put on because they want more hail protection going forward. And that, I would assume, increased costs as well, right? And homeowners associations are requiring, he even mentioned some communities are requiring upgraded roofs for hail protection issues. Is that something that's influencing those premiums as well?
Oh, I mean, absolutely. So often we get into the conversation of if you're going to end up filing a claim at some point. It's really not a question of if, it's when. And then what outside influences and aspects are going to affect that? Are you in a community that requires concrete tile? Do you have a lot of those communities that used to have the old wood shake roofs, they're requiring tile. You cannot
Sure.
put your standard asphalt dimensional roof on it. So by contract in certain ways with your community or not, yes, you might have to pay to upgrade. Now, is your insurance policy going to pay that upgrade or not? As we
Right.
get further into this discussion, we're going to talk about some of the short and long-term pitfalls that homeowners can get into. It's, what is the word and what is the rule today does not necessarily mean that's the rule and the word tomorrow. And we
Right.
are seeing that right now in the property and casualty industry, specifically the homeowners insurance, to the fullest. We're
Sam,
seeing companies make changes on a daily basis, on an hourly
right.
basis.
Yeah, that's just crazy. Um, if you could share the story that you shared with me a couple weeks ago, where the homeowner had filed a claim and her policy increased exponentially. Do you remember what story I'm talking about?
Yeah, I have two of them. And it talks about the initial home purchase process. It's everybody has a dream of home ownership, maybe a location of home ownership. Okay, so many people, their vision of this dream is clouded by I want to buy this house, and everything else. They get that tunnel vision of everything else surrounding that. So the two basic examples. One was in a certain zip code that's becoming a problem zip code right now, and actually has been for a while. So you start to couple this with the characteristics of the home. Where's it located? What year was it built? All these different things. So in that case, she purchased a home recently. I think it was in 2020. Went through what we would consider a smaller claim, but a necessary claim that she did have to file. Because of that claim, paired with age of structure and the zip code that she lives in, for the most part, she's ineligible to move to a different carrier. Each carrier has specific new business guidelines and new business eligibility. So today, when she goes out to quote that homeowner's insurance policy, these carriers might not allow her to come into the company based on certain criteria. Well, in this case, her homeowner's insurance premium with her current company went through the roof. It's truly, in a way that she put it, it's unaffordable to her, but she does not have mobility. She does not have the option to change. So she's going to have to make some very tough decisions from a budgetary standpoint. It's going to really affect her current and long-term budget aspects, because
Sure.
just selling her dream home might not be the option. But also paying a $4, $5, $6, $8,000 homeowner's insurance premium might not be feasible as well. So all these things, they really do affect things. And type of it all comes back to type of property. Have another example. Actually, early in my career, went through a gal who ended up essentially in a foreclosure proceeding because of insurance. She had a type of property. She was in a mobile modular home. You start to shrink the market eligibility there. Not all companies offer insurance for modular homes or mobile homes. So when you get that limited amount of carriers that will accept that policy, and she went through a couple very small claim situations, the small amount of carriers that would accept that said no. She could not find replacement insurance. Her lender, per loan contract, forced place insurance on it. She couldn't afford. So there's these pitfalls that the dream of homeownership, you have to ask questions up front.
What are some questions, and what do you do, Sam, when, if I have one of my clients reach out to you and they're talking, and let's just pick, a rancher on the south side in Pueblo,
Mhm.
nothing unique, nothing special, not a unique situation, but probably built in the 70s. What are some things that, if the client's not talking with you, what are some of the questions or things they should be looking out for? What are some of the common mistakes people make when they're shopping for homeowners insurance?
And what I call the basics of homeowners or property insurance altogether. So often, it escapes, the home buyer. So number one's deductible. And we have some confusing terms out in the industry right now. Fixed deductible or percentage deductible. A lot of the industry is moving towards a percentage deductible. So many people think that a percentage deductible is calculated based on the amount their claim is. No, that percentage deductible is predetermined. It has to do with the amount of dwelling coverage that you have, and you take that amount times the percentage. We're seeing 1% wind and hail deductibles right now. We're seeing 2% wind and hail deductibles right now. We're seeing 5% wind and hail deductibles right now. So,
And Sam, let
is
me interrupt you really quick. So when you say percentage, so if I have a home, and we're going to keep the numbers easy here, let's say it's a 500, that we're insuring that home for $500,000 wind and hail damage,
Yep.
and I have a 1% deductible, and I have some damage to the roof, and it's pretty substantial damage, and it's $6,000 worth of damage.
Yep.
As a homeowner with a 1% deductible on a $500,000 home with $6,000 worth of damage, how much am I out of pocket?
You're out of pocket 5,000.
Okay, so I do understand it. Yeah.
1% of 500,000 is a $5,000 wind hail deductible. And we get into these aspects of, as we get through some of this stuff, it's having an agent, having a broker that you can speak with. Okay. Because when you send your people out to ask questions to the industry, not everybody answers questions. I'm there, whether you're a client of mine, a potential client of mine, or we both know that you're never going to end up doing business with me. I'm there to help. I'm there to educate. I've done it my entire career. I've created a huge following just because you get truthful, objective, professional advice. So a lot of companies that you call and you start asking these questions, their response is, would you like me to quote your insurance or not?
Right.
And there's a lot of that going on. The 1-800 industry, call them and ask them a generalized question, first of all, if you're a client of theirs, and second of all, if you're a prospective client, you're probably not going to get the information that you need.
You're probably going to get an email with a policy document.
Yeah.
Would that be a good guess?
You know, you call an agent. In many ways, you call a company and say, "Can I ask a question if this is covered or not?" The response is, "Would you like to file a claim? Yes or no?"
Right.
Too often that occurs, so it's difficult for the homeowner. It's difficult for the somebody buying their second or third home, and it's very difficult for the first time homeowner or home buyer. So these are very important things. Deductibles huge. Other questions that you need to ask, and they go together. Coverage, which when you look at a 160-page insurance policy, is a very loaded question, because how many people can discern 160 pages of information? But what are the exclusions? Let's not talk about 150 of those pages. Let's talk about 10 of them. What's excluded from coverage here? You get a lot further asking what's excluded than you do asking what is covered. And then in many ways, asking what are the limitations. Okay, each policy has specific things included in coverage. They have specific things that are excluded from coverage. And within both of those two things, there are limitations as well. Limitations on specialty items, jewelry, tools. Each company is very, very different on the limitations that they have. So to think that this is absolute homeowners insurance is homeowners insurance, not at all. Each company different. And then the big one, and it's becoming absolute number one discussion in the industry, is what we call loss settlement. Okay, so you have an insurance policy in place. You had an occurrence. Okay, how is that loss going to be paid out? Is it going to be paid out at replacement cost? Is it going to be paid out at functional replacement cost? Is it going to be paid out as actual cash value? Is it replacement cost with a schedule built in? These are extremely, extremely important questions for any homeowner, new, current, buying your fifth home. You're an expert at it. Okay, that's one of the most important questions to ask in today's insurance world. Is
And
how
if I understand you on that, Sam, it would be like, okay, we need to replace this roof because of a loss. It's $20,000 to replace it because they got to replace the deck and everything. $20,000, and your policy could pay the $20,000 less your deductible. It also could pay significantly less on that, depending on your contract with the insurance company.
Yes.
Correct. I mean, you could be out of pocket not only your deductible, but you could be out. They're only going to pay 10,000 of the 20, and you might have a $5,000 deductible, so you're getting 5,000 covered out of a $20,000 roof replacement.
Exactly, and those are the questions the good agents, brokers, companies, the transparent agents, brokers, and companies can answer that on the front end.
And those are all tied to premium, right, Sam? I mean, I may
yes
be
no.
getting.
Yes,
well,
no.
but what I'm saying is I might talk to you and have a quote of insurance of $2,000 a year, and I may have coverage when you're quoting me that I may have that full replacement coverage where they're going to pay the full 20,000. I may get a quote from someone else, and they are insuring the same house and they're insuring the same amount. In other words, a $500,000 home. We're both insuring a $500,000 home, but their premium is $1,000 a year, and theirs is going to pay the $5,000 out of my roof replacement of 20 grand. Though that's in a very simplified, very high overview. That could be why that premium, even though it's insuring the same $500,000 home, you could very well be substantially penalized when you go to replace that roof from an insurance claim.
Absolutely. That, the aspect of age of roof is becoming big on the front end eligibility, and then come potential claim time. What is the age of roof? if you do have, and there's a lot of companies in this industry that are going there, and you end up in, let's use a basic 30-year roof life. If you have a 15-year-old roof with a schedule built in there, in most cases, you're only going to get 50% of the replacement cost. So that's your perfect example on a $20,000 potential roof replacement claim. If you have a schedule built in and a 15-year-old roof, which, let's go comb our neighborhoods. And we had hailstorm in 2007. Okay. Hailstorm in 2009. There's many, many roofs in our community that are right at the 15-year-old mark. Now, they're not leaking. That doesn't mean they're a bad roof, but your insurance can significantly change come claim time. And $20,000, when we talk about severity of claim again, $20,000 for a roof replacement, well, that's not extravagant. Okay. This is normal, 15, 18, 20 grand. It's very difficult to find a roof replacement on even the smallest structure for less than that. So yeah. $20,000 is the bid to repair your house and your roof, and your insurance company is going to give you $5,000. These are the things. Premium is only one aspect of the global situation. And that's where I go through premium, deductible, coverage, loss, settlement. Everything in ways is just as important as the next. And having somebody explain that on the front end, you can get all this information out. You can get all this information pre-purchase. So these are the questions that are absolutely a must.
Sam, when I've dealt with you, it's been super high pressure sales. You either have to answer all my questions and buy a policy, or I'm not going to help you. That's a joke, everybody. Sam's exactly opposite of that. In the past, he has helped some clients of mine, and he's helped some clients of mine that have used other people. Sam has always treated them very, very well. Like I said, I've known Sam for a long time. Sam, I look at myself in real estate as an advocate for home ownership. I know not everybody's going to do their loan with me, and that's okay. I help a lot of people through the process, even if they're not using me as their loan officer. My experience with you is that you do that same thing, and you always talk to me, and you always talk to our group at BNI that you do insurance reviews and shy away from quotes, but you'll do a quote if that's all anybody wants. But that review can help address a lot of the things that people are facing that maybe they don't know about, right? I think that's the scary part, is that there's existing homeowners that think everything's great, but I have a feeling you're hearing stories of a lot of people finding out at the time of a claim that they're really stuck.
Well, yeah, I mean, and there's many aspects to it. I mean, there's longevity policies out there with a company. It might be by new business standards, that company might not accept that property, that policy in today's world, but this person has had that policy for 10, 20, maybe even 30 years. That policy could be, thought of as a bar of gold. So reviewing somebody's current insurance is just as important as the quote, because at the end of that, it might make the most sense for that client to stay exactly where they're at.
Right.
And there's different coverages. Some of these 20, 25-year policies, they did not include what's called service line coverage. So that might be something that might not be covered today, but they might not be on a schedule for their roof. So all of these intricacies are so important for the current homeowner that might have had insurance forever. That leads me to my number one pitfall out there, has to do with assumptions. So many people have an assumption of covered.
Mm-hmm.
I've paid premium forever. Therefore it's covered. It's a very straightforward contract, whether you're with one of the big names that advertise on television all over, or whether you're with a small regional carrier. It's a contract. That contract is what is applied to a potential loss. So the assumption of coverage, number one biggest pitfall. Ask questions before the potential loss happens. What if? if you're talking with a good agent broker, they can answer many, many what ifs. There are times where it's a little out of bounds for us to go into detail on a, what if scenario. At times you just have to file the claim. Liability cannot be determined without a thorough investigation. But yeah, you ask questions, and assumptions can cost people a lot of money, unfortunately.
Sam, we're running up against our clock. It's been a quick 30 minutes for us. I want to say that I think we've got a couple big takeaways for folks. One, for new home buyers, first-time home buyers, take the time. I know it's a busy process, lots of stress buying a home, lots of moving parts, but it sounds like to me, Sam, what you're saying for these first-time home buyers is don't just get a quote. Understand what is going to be covered and how it's going to be covered and what your potential out-of-pocket expense is going to be when you have a claim. And two, for existing folks, existing homeowners that have policies, don't assume that you're all set. Would you say those are the two big takeaways for insurance right now?
100%. I mean, the word assumption, it's a contract. You can get all the answers. You just have to ask the questions. And I would always go back to ask questions. It's okay to get another opinion. It's okay to be loyal to a company forever and ever, but ask questions. Get the objective, professional opinion and advice. Get the objective answer that the contract says. So yeah, asking questions, and holding your company accountable. Your company is going to hold you accountable. You are expected to pay your premium. Hold the company accountable as well. Have them answer the questions on the contract.
Sam, thanks again for all of your time today and your knowledge. If people want to reach out to you, they've got follow-up questions, they'd like to have an insurance review, they'd like to get a quote, where can folks reach you? What's the best way to get a hold of you, Sam?
Easiest way is my website, Samuel Proal, SamuelProal.com, SamuelProal.com. Phone number, local 719-696-7770. On my website, you got a contact me banner. A lot of different ways. Would love to chat with anybody who has these unanswered questions.
Yeah, and I'll put your contact information as well in the comment section, folks. You can find all of my contact information as well there. And also my partner, Mark Ditkoff, the co-host of SoCo's Most Interesting Podcast, in those comments as well. Sam, thanks again. Everybody, please like and subscribe. Leave some comments. If you've got some questions, and put them in our comments, I'll make sure Sam gets those and we can get some answers posted both on the comment section, and he can reach out to you as well. As always, everybody, thanks for taking the time to be with us for SoCo's Most Interesting Podcast. I'm Chris Bongiorno, and we'll see you next time.